Today's topic is we're going to provide a comprehensive list of documents typically required when processing a reverse mortgage, especially under the Home Equity Conversion Mortgage HECM program. It covers what you'll need at each stage, from initial application through underwriting qualification to closing. Because many lenders and products vary somewhat, you want to use this as a thorough checklist rather than as an absolute guarantee. Your lender may ask for additional documentation. Preliminary documents establishing eligibility. Before you begin the formal application, a number of documents will be collected to verify that you meet the basic eligibility requirements for a reverse mortgage. Proof of age and legal status. A valid government-issued photo ID, such as a driver's license or passport, showing your date of birth. Social Security card or statement from the Social Security with the Social Security number. Often documentation may include Medicare cards, but only if it has your Social Security number on it or other evidence of Social Security number. Proof of U.S. citizenship or permanent legal residency. Some lenders will require this, particularly if the home is in the United States. If you are applying along with another borrower, joint borrower, the same documents will be required for that person as well. Property ownership and residence verification. Since a reverse mortgage is secured by your home, and the home must be your principal residence in most cases, you'll need a copy of a property deed or other title document showing the ownership of the home. Evidence that a home is your primary residence. You live there the majority of the year. If applicable, evidence that an existing mortgage in a home is either paid off or that you can pay it off with the proceeds of the reverse mortgage at closing. If the property is held in a trust, the trust document may need to be reviewed, i.e. revocable living trust, irrevocable trust, etc., to verify that the trust ownership is acceptable to the lender. If the property is a condominium, manufactured home, or 3 to 4 unit property, further documentation may be required, such as condo certificate, manufactured home foundation certification as part of specialized eligibility. Home equity and property value basics. A recent property appraisal will be required, even if the applicant even at the application stage, many lenders will ask that you schedule an appraisal. Evidence of estimated home value, comparables if available, or lender estimate of value. Evidence of your current mortgage balance, if any. This includes the most recent mortgage statements, showing outstanding balances, monthly payments, and account numbers. Property tax and homeowners insurance payment records to show that you are current on property charges and the property is insured. Reverse mortgage counseling certificate. For HECM mortgages, which are federally insured under the Federal Housing Administration via the U.S. Department of Housing and Urban Development, HUD, you must complete a counseling session with an approved housing counselor. You'll receive a certificate of counseling completion, which must be submitted. The counseling ensures you understand how reverse mortgage works, repayment triggers, costs, impacts on heirs, etc. Formal application documents. Once you decide to proceed, you'll find a formal application that you'll submit with supporting documentation. This includes everything from initial loan application to detailed financial documentation. Loan application form, typically a reverse mortgage form. Many lenders use a version of the standard mortgage loan application adapted for reverse mortgages. For HECM, there may be a specific residential loan application reverse mortgages form, such as Fannie Mae 1009, that asks for property title status, ownership, trust information, etc. You'll need to provide full personal information: name, address, social security number, date of birth, marital status, current address history, property address, and other standard loan application fields. Financial and asset documentation. While reverse mortgages have different income credit requirements than traditional forward mortgages, many lenders still require documentation of your assets, income sources, debts, and payment history. They may include bank statements, checking or savings for the past 1 to 2 months, usually 2 months. Investment account statements, IRAs, 401ks, stocks, bonds, if applicable. And then we want the most recent quarter of those statements. Proof of any other regular income sources, pensions, Social Security, annuities, part-time employment, even though you may not need income in the traditional sense, since you're not required to make monthly payments. The lender will review your ability to pay ongoing property charges, taxes, and insurance, and will conduct a financial assessment. Documentation of any debts or obligations, credit cards, loans, line of credit, to review the borrower's payment history. The lender will check for payment history on property charges, taxes, insurance, HOA fees, mortgage loan payments. Homeowners insurance policy declaration page showing the property is insured and homeowners / HOA fees, if applicable, have been paid. Proof that property taxes are paid, current tax bills, usually 2 years, and their receipts. If there are homeowner associations, HOA, dues, or condominium fees, documentation of these amounts and payment status over the last 24 months. Credit and payment history documentation. The lender will evaluate the borrower's payment history on property taxes, insurance, HOA, dues, and existing mortgage payments. While there's no specific minimum credit score on an FHA/HECM loan, the payment history matters. If there are past late payments or delinquencies, the lender may require a life expectancy set-aside called a LESA, LESA, or other reserves to cover future property charges. Proof of residency and occupation. Utility bills or other documents showing the property address and the borrower resides at that address. These will help establish the property is a primary residence. For multi-unit properties, 1 to 4 unit properties where borrower occupies 1 unit, documentation showing occupancy of at least 1 unit by the borrower. Property documentation and appraisal package. The lender will require a full appraisal using the appropriate form, for example, the Uniform Residential Appraisal Report, URAR. If repairs are required for health, safety, or habitability, there may be a repair rider and a completion report. Evidence of flood certification for the file of the loan, for the life of the loan, may also be required. Eligibility documentation specific to special situations. If the home is a condominium, the lender may require documentation that the condo is FHA approved or meets the requirements of the HECM program. For manufactured home, there may be foundation engineering certification or other specialized eligibility documentation. If there is a non-borrower spouse of the primary borrower, who is not on the note but remains living in the home after death of the borrower, then documentation of the spouse's age, competency, and perhaps credit payment history may be needed. Underwriting and financial assessment documentation. At this stage, the lender will dig deeper into the finances, property charges, occupancy, and ensure you're capable of fulfilling ongoing obligations. This may require funds for reserves, for taxes and insurance, etc. Financial assessment worksheet, underwriting documentation. The lender will complete a financial assessment worksheet for HECM loans issued after March 2nd, 2015 that documents the borrower's ability to pay ongoing property charges. This assessment may require documentation of bank statements, tax returns and other income sources, and verification of reoccurring expenses, taxes, insurance, HOA, fees, utilities. If the borrower has borderline payment history or low residual income, the lender may require a life expectancy set aside, LESA, the funds set aside from loan proceeds to pay future property charges. Supporting documentation for that will be required. Property charge verification. Documentation confirming that property taxes, homeowner insurance, flood insurance, if applicable, and HOA dues are current. The lender may verify the borrower remains current on these or will be after closing. Proof of homeowner HOA fees, latest statements, and proof of payment. If the property is subject to additional obligations, homeowner association, plan unit development fees, these must be verified as well. Title and lien search documentation. The lender will perform a title search to verify you have clear title or that your existing liens, property mortgages, second mortgages, etc., tax liens are properly disclosed. If you have an outstanding mortgage, they must ensure it will be paid off at closing in full or via the proceeds. If there's outstanding loans or liens, documentation showing payoff amounts must be submitted. Insurance and hazard documentation. A homeowner insurance policy that meets lender requirements, coverage amount, hazard coverage, endorsements, etc. If it's in a flood zone, flood insurance is required, plus evidence of coverage. Lenders use life of loan flood certificates. Evidence that the home meets minimum property standards, sound, safe, and secure, and there's no known hazardous conditions exist, or that the corrective actions, repairs have been or will be made. Appraisal inspection documentation. The appraisal report with comparable sales, condition of property, attachments, endorsements, etc. If required, inspection or completion report if repairs were to be made, i.e. the HUD 9205, compliance inspection report, or Fannie Mae Form 1004D. Pre-closing and closing documentation. If you approach closing, there are final documents to sign and submit. These ensure everything is in order and you understand the terms, disclosure, and closing paperwork. You must disclose the required disclosures, such as closing documentation, closing disclosure, or other mandated disclosure forms showing cost terms, etc. The settlement or closing statement will itemize the loan amounts, fees, charges, and any payout of existing liens. The loan documentation themselves, which you will sign, include the promissory note, mortgage, or deed of trust, securing the reverse mortgage, and other legal documents. Assignment of mortgage insurance coverage, if an FHA or HECM, or shared premium assignment options for FHA. Borrower certifications and acknowledgments. Certification that you live in the home as your primary residence and intend to continue living there. Acknowledgement of your responsibilities under the reverse mortgage, paying property taxes, maintaining the home, keeping property insurance, etc. Acknowledgement of the effect of the reverse mortgage when the loan becomes due and payable, such as when borrower dies or permanently moves out, how interest accrues, etc. If applicable, a certification verifying that you completed counseling. Often the lender holds this already, and you may need to sign again. Power of attorney, trust documentation, if applicable. If you're using a power of attorney, POA, because you cannot sign personally, the lender must review the POA documentation and may require a physician's letter of competence or other verification. POAs are used with caution in reverse mortgages due to elder fraud concerns. If title is held in a trust, the trust documentation must be provided, and the lender must verify that the trust qualifies, especially for an FHA HECM loan. Final verification and closing conditions. Final verification that all liens were paid off and proceeds are sufficient. Final verification of homeowners insurance in force, property taxes paid, HOA dues current. Final verification of property inspection, if required. Documentation of how you receive your funds, lump sum, monthly draws, lines of credit, or combination, and terms of disbursement. Even though the loan is closed, you retain certain responsibilities and the lender servicer will monitor them. Some documentation may still be required after closing. Home maintenance and property charge documentation. You must continue to pay property taxes, homeowners insurance, flood insurance, if required, HOA, condominium fees, and keep the property in good repair. The servicer may inspect the property with notice to verify it remains safe, sound, and secure. The documentation usually gives the lender servicer that right. If required repairs are identified, you'll have to start them within a specific time frame, typically 60 days. Servicing and draws documentation. If you receive your funds via line of credit or monthly advances, the servicer will maintain records of draw requirements, requests, and disbursements. If you use a set-aside, LISA, for taxes and insurance, the servicer will monitor that account and ensure funds are used appropriately. Situational documentation. If a non-borrower spouse stays in the home after the borrower's death, as permitted by certain HECM rules, documentation requiring occupancy may be required. If you move out permanently, say into assisted living or nursing home, documentation of that fact will trigger the loan becoming due and payable. In the event of a sale of the property or refinance, documentation required to close out the reverse mortgage. Documentation list. Here's a simple table of all the major categories and documents you'll need summarizing the above. Age and identification, driver's license or passport, birth certificate, social security card, proof of citizenship, residency. Ownership and residence, deed, title, property address verification, utility bills, trust documents, if applicable. Property status equity. Most recent mortgage statement, property tax bill, homeowner insurance, appraisal, or estimate. Counseling. Certificate of completion from HUD, approving reverse mortgage counselor. Assets and income, bank statements, investment statements, pension, annuity, social security, income, tax returns, if applicable. Debt and payment history, credit card, installment loans, existing home payment history, HOA dues, condominium fees. Property charges and maintenance. Evidence of current property taxes, insurance, HOA, condo dues, proof no delinquent charges. Appraisal and condition, appraisal report, any inspection, repair, completion reports, flood certification if required. Application and loan documents, completed loan, application form, financial assessment worksheet, title search, lien, payoff documentation. Closing paperwork. Promissory note, mortgage, deed to trust, settlement closing statement, disclosures, insurance assignments, certification of residency, occupancy. Post-closing obligations, homeowner insurance policy, property taxes, HOA, condo dues payments, records, property inspection results, drawer and servicing records. Important additional considerations, details, counseling requirement. As noted, the FHA insured HECM loans, borrowers must complete a counseling session with an independent, HUD-approved counselor. The certificate from the session must be part of the package. This is a mandatory step and cannot be bypassed. Age requirements and occupancy. Must be at least 62 years of age for standard HECM loans. The property must be a principal residence. You live there the majority of the year. Property eligibility and conditions. The property must meet certain condition and type criteria. Typically a 1-unit home, a 2 to 4 unit property with borrowers occupying 1 unit. Eligible condominiums, manufactured home that meet FHA HECM guidelines. The home must be kept in good repair and the property charges must be current. Financial assessment. While reverse mortgages don't require monthly payments like traditional mortgages, the lender must determine that you can pay ongoing property charges, taxes, insurance, HOA, and maintain the home. That may mean reviewing your assets, income, credit payment history, and potentially require a reserve, also called the LESA, LESA. Disclosures and costs. You'll receive disclosures about loan costs, interest accrual, repayment triggers, impact on heirs, etc. It's critical you understand the closing documents. Liens mortgage. If you still owe on a first mortgage or other lien, you must that must be paid off or at or before closing, or you must qualify for how the reverse mortgage proceeds will handle it. Trusts, POAs, non-borrowing spouses. If the title is held in a trust, if a power of attorney is used because of incapacity, or if there is a non-borrowing spouse scenario, extra documentation and review may be required. Power of attorneys particularly are scrutinized due to the risk of elder abuse. Ongoing obligation, default risk. After closing, you still have obligations. Keep property as your principal residence, pay taxes, insurance, HOA dues, maintain the home. Failure to do so may trigger the loan becoming due and payable. Why all these documents matter. Processing a reverse mortgage involves risk management for the lender and compliance with HUD or other regulatory standards. Here's why each document category matters. Age, identity, citizenship. Ensure you meet minimum age 62 and legal residence requirements and helps prevent fraud. Ownership type and title. Documentation demonstrates that you own the property and have the right to use it as collateral. Without clear title, the reverse mortgage cannot proceed. Property value equity. Lenders need to be confident that the home has sufficient value and equity to make the transaction viable, that you either own it outright or have manageable obligations. Counseling certificate. Ensures that you, the borrower, are fully aware of how a reverse mortgage works, including obligations and risks, especially given that your home equity is being converted into loan proceeds. Financial assessment documents. While you're not making monthly payments like a traditional mortgage, the lender must ensure you can cover the ongoing charges tied to home ownership, taxes, insurance, HOA, and will occupy the property. Property condition, and appraisal. The home must be in good condition, safe, and structurally sound because the value of the collateral matters for default risk. Closing department disclosures. Ensure everything is transparent and legally binding, that you understand the terms, costs, and obligations. Property closing obligations. Since the loan is a non-recourse in many cases, and repayment is typically deferred until you move out or sell or die, there still must be safeguards to ensure you maintain the property and meet obligations. Tips for preparing the documents smoothly. Start early. Obtain a copy of your deed title, your most recent mortgage statement, tax bills, insurance policy, and insurance bills to show occupancy. Organize your identification information, driver's license, passport, social security card, birth certificate ahead of time. Collect bank and investment statements for the past 2 months and any income documentation. Make sure property taxes, homeowners insurance, and HOA fees are current. If not, bring them up to date to avoid delays. Schedule your reverse mortgage counseling session as soon as you decide to proceed so the certification is ready for submission. If your home is a condo or manufactured home, check with lender ahead of time whether any specific eligibility or documentation will be required. If you hold title versus a trust or plan to use a POA, alert the lender early so they can review the trust or POA documentation. Use a checklist. Many lenders or reverse mortgage specialists will provide one to make sure you have all required documentation ready for the underwriting closing process. See, for example, the HUD attachment list of required documentation for HECM endorsements. As your lender, ask your lender what specific local state documentation they may require. Florida may have additional property tax records or state insurer requirements. Keep copies of all documents submitted and verify that the ones you provide are legible, signed where required, and current, i.e. the most recent statements. If any documentation have issues, for example, your insurance is expired, tax bills unpaid, or the home needs minor repairs, address those proactively to avoid closing delays. Common pitfalls and how to avoid them. Missing or outdated documents, i.e. property taxes not current, homeowner insurance policy missing, it causes underwriting delays. Unclear title or undisclosed loans. If you owe property taxes or other liens, they must be handled before closing. Neglecting counseling requirement, cannot proceed to close for HECM without the certificate of counseling. Asset statements not matching reality. If you list investments but cannot document them, lender may require additional verification or reduce eligibility. Poor payment history on property charges, late taxes, insurance, HOA fees can trigger requirements for set-aside funds, increasing costs or delaying the process. Occupancy issues. If you don't prove the home is your primary residence, the loan may be denied. Conditional problems with the home. Major defects may need to be fixed or repaired prior to closing. This adds complexity and cost. Title in a trust or the use of POA without proper documentation. These can complicate underwriting and slow things down. Not understanding your ongoing responsibilities after closing. You must keep your taxes, insurance, and maintenance up to date. Failing to do so may cause default. Conclusion. Applying for a reverse mortgage is a significant financial decision, and the documentation required reflect that. The major categories: proof of identification, age, property ownership and condition, financial assets, and ability to cover ongoing costs, counseling certification, and the detailed closing paperwork are all essential to protect you, the borrower, your heirs, and the lender. By preparing these documents ahead of time and staying organized, you'll help ensure a smoother process from application to closing. If you're working with a specific lender, request a detailed checklist. Many do provide one, and we do. And verify any state-specific requirements, for example, in Florida, or any additional documentation they may require. If you like, you can pull together a state-specific checklist for Florida that outlines relevant additional forms, state regulations, and local practices. Would you like us to do that for you? We'd be very pleased to do so. This is Bob Gersh with East Coast Capital. And if you have any questions, would like to talk further about the documentation or the process of a reverse mortgage, feel free to give me a call, contact me. Best way is my phone number, 781-454-7138. And once again, it's Bob Gersh, East Coast Capital. And the phone number is 781-454-7138. Have any questions? Like to discuss the pros and cons of a reverse mortgage, the documentation required, feel free to contact me at any time. Look forward to talking to you. Have a great day, a great week, great rest of the year. Enjoy life. Until next time, thank you.